All right, g'day, welcome to another episode of Sidekick TV. Sorry we've been absent for the last 2 weeks. That's my fault because I've been on holiday and we were going to have Mordecai in here today, but we've just kicked on without him because he's running late. But I'm really looking forward to this week's Sidekick TV because we've got with us Sam Wilkinson from Orix Finance. Now, Sam and I have known one another for about 6 years already. We've been working together because Sam's been with business banking with ANZ and then a few other roles with the ANZ and then has recently joined Orix, heading up the commercial asset finance and leasing. So Sam, you know, it's a very, very changing landscape at the minute, vehicle finance, asset finance. What we want to do is help our clients, help our people in our group really just understand probably what are their opportunities, what should they actually be looking at. So this is a big question, but I just wanted to start off with, you know, what are you seeing now? What's new in this kind of business finance space that perhaps, you know, someone that last reviewed this a couple of years ago, 3 years ago, just wouldn't be aware of?
Yeah, okay, thanks, Rick. Well, first of all, thanks for having me, and it's great to be part of this. So yeah, hopefully it won't be the last time.
No,
yeah.
sure it won't be.
Yeah. But what's new? I mean, I guess when you look at the last 2, 3, 4 years across finance, what's new now is historically low interest rates globally. So there's a big opportunity in there for anyone who's looking at asset finance or considering leasing options as well. Is that rates now for asset finance are lower really than they've ever been.
Yeah.
So that's probably the main thing.
Yeah.
That is new right now as opposed to a few years ago.
Yeah, we've been speaking to, well, in our previous videos as well, you know, go and talk to 70-year-olds, right? Okay, that are in business, right?
Yeah.
You speak to them now and you go, well, right now your cost of funds are 2 or 3% in some cases, not 23%
Yeah.
that they had last recession, or
yeah,
well,
right.
maybe the one before the last global financial crisis, you know.
Yeah.
So also, you were telling me earlier as well that there's some other big changes as well. Like, what's this like cash flow versus solvency? Like, what's that?
Cash flow versus solvency. Yeah, it's an interesting one, isn't it? I guess what we're seeing at the moment through COVID with a lot of input from the government into businesses, it's really around helping businesses with their cash flow to stay afloat, I suppose, which is necessary and needs to be done in many cases. The interesting thing to think about is that as a business owner, that is going to have an impact on your balance sheet.
Yeah.
So what we mean by solvency is, are your assets more than your liabilities? Now, if you're borrowing money because of COVID, then that's going into your liabilities. So
it's kind of like
the solvency perspective.
Yeah.
Yes, we're staying afloat right now.
Yeah.
What does this actually look like for us long term from a balance sheet perspective? And are we going to be able to repay what we're borrowing now? So solvency cash flow might be looking good. We're staying afloat, head above water. We're able to pay our staff, all of that sort of stuff. A couple of months down the track, from a balance sheet perspective, do we have the equity to carry on in business, and are we going to be able to repay our debts? So there's a fine line there between staying afloat and getting it right and doing the right thing in the long term for your business.
It's kind of like we're all doing our own version of quantitative easing in our own businesses, aren't we? Which, if the horizon for that coming right is a long time off, that could be creating some big problems in people's businesses, couldn't it?
Yeah, absolutely. And it's about having a plan, right? And knowing what your market is for your business and being able to execute that really well.
Yeah.
It could be an issue if you don't, and then you start asking the question, well, are we putting money into our business now? Are we staying afloat?
Yeah.
So help are we getting through the government? Are we delaying the inevitable? Or do we need to take this time now to make a plan, to make a change within our business to enable us to continue into the future and be profitable?
Another thing I'm just thinking about now as well, from where you talk about the solvency issue, is, let's say the IRD's been relaxed this year about payments. Now, lenders like Orix, we work with a number of other great asset finance providers as well, and of course we work a lot with the banks, but they might, unbeknown to them, have all of these clients that are building up liabilities all over town, because they're not having to pay the GST, they're not having to pay all the taxes.
Yeah, right.
So if it kind of comes crashing down in a year's time, 2 years' time, a lender might be towards the bottom of the list.
Absolutely.
Yeah,
Absolutely right, Rick. It's a challenging time, and it's an interesting one, that's for sure. And I come back to the point that I made just a touch earlier, is that it really does come down to having a good plan. Yeah, and getting great advice from your business advisors and your accountants, whoever that might be. Hopefully it's Rick.
Yeah.
Well, he didn't pay me to say that. But it does come down to having a great plan and great advice, so that when it comes to your finance, and might be your asset finance or your property finance, that can be executed well at the time when you need it, if you've planned for it well.
So really, you're going to be backing businesses that have a plan, can show the ability to pay it back.
Yeah. Well, the very first marker of whether a asset finance or any finance really is going to be successful going forward is what is the recent history of this business and the business owners.
Yeah.
And that's really, absolutely, and their character and not only the ability to repay, but their intent to repay.
Yeah.
And there's a difference there. So that's very, very important for any finance, really.
Yeah, and you'll have seen a lot of that over your years at the bank, that difference between intent to pay and ability to pay. So backing people, cool. Well, we've only got really, really great people in this group, so we don't need to worry about that. I tell you what, I just want to touch on one quick point here before we move on from that. Was you spoke about historically low global interest. When you told me some of the rates that you can lend at, 5 and 6% for vehicles. I mean, about 5 or 6 years ago, that was my mortgage rate.
Yeah.
That's unreal.
Yeah, it's a changing market, isn't it? And what an opportunity in there. So, 5s and 6s for asset finance is certainly achievable at the moment. For Orix, given our company is owned out of Japan, and has had that ownership structure for a significant amount of time, if you're keeping an eye on rates and what they're doing globally, you'll know that Japan rates over there are pretty low / negative. So the business is saying, hey, look, let's get some return on the capital that we have. So where can we do that? And New Zealand and Australia at the moment is looking like a place where that can happen.
Perfect.
So what we're seeing over here is rates that are very competitive and an appetite to lend to businesses that have a good balance sheet. So fundamentally they have sound asset position or good equity, but then also show a good recent history of profitability.
Perfect. Okay. So we spoke earlier. So what do we think people's and business owners' opportunities are? Look, that's one of them, isn't it? So cost of funds is low, right? Equally though, you've got to find something to spend that money on. So what are you seeing in the marketplace? What would you be looking at your clients doing to be more successful over the coming years?
Yeah, that's a good question as well. I think, as I've already mentioned, one thing that comes down to, markets for success is getting great advice. And you need to be getting great advice and not being on the back foot when you get that advice, presenting a problem, but hey, let's present an issue that we're thinking about going into the future. And then
we've just had Mordecai join us here, so bring him in. We're mid-video.
Mordecai, well, thanks.
Excellent. All right, we're mid-video here, so we're on. Mordecai's in the room now, guys. Yes, so we were talking about one of those markers for success. Basically having that plan, doing all of that. We've also spoken as well, haven't we? Like, we've got guys in the room here that are we're looking at you know, you're seeking out advice, you're focusing on your business, you're looking for what you can be doing. And that's, the proof of that is you're watching this. That's right. There's going to be a lot of people where their competition have got their head in the sand. You know, they aren't wanting to make the tough decisions. So a prediction, loose one, is that these guys might have a whole heap of kit coming onto the market that they could use in their business, and it could be cheap. You know, are you seeing that kind of thing happening yet? Are you predicting that kind of thing happening?
Yeah, it's probably a little bit too early to say, to be fair, and I guess that's not something we really wish on anyone, is that they're in a position where they have to liquidate their assets.
Yeah.
And, you know, fire sale their stock, that's tough for anyone, and, you know, you don't wish that on anyone, really.
No.
However, we do have a good range of used assets that are for sale, or you can finance or lease as well, and they're on our website. And it's also timely to think about the age of your assets as well.
Right.
Right now, and think, hey, given the historically low rates and the competition that's out there, because make no mistake about it, it's a great country to be in business in terms of competition for asset finance or any finance, so to speak, in the banking system. You know, there's a number of really good banks that can help you out.
Yeah.
And as a consumer, you've got, you know, great choices to be able to make. And the same goes for asset finance and leasing as well. But one of the questions you can start asking yourself there as well, given things are historically low and there's competition at the moment, is leasing a new asset an option for me, as opposed to taking the hit and cash flow and buying something that's used.
Yeah, because that's going to give you real certainty to your operating costs in the future, isn't it?
Absolutely, because, you know, with leasing, you can have a maintenance plan included in that.
Yeah.
You know what your residual is going to be, generally speaking, you know, from the outset, the term that you agree to.
Yeah.
So it provides real certainty and peace of mind, not only in terms of your ongoing costs of the asset, because it's new and because those are built in from the start.
Yeah.
So effectively, as a business owner, you know what you're up for, more or less, in regards to the cost of finance and the cost of that asset over the next 2, 3 or 4 years. And
ultimately, that is a lot of the conversation we're actually having with our clients right now. But okay, do you want to come and join us? You're in? You know, we're saying to our clients, like, take a real look at what's going on at the top of your business. Make sure you've got sales, make sure that's all happening. But if they've got the bulk of their OPEX, the bulk of their other costs in their business locked in, what a nice position to be in. Absolutely. To just have to chase the top line. You know, like that's what's going to help them get through what should be a tough couple of years ahead.
Well, then they can focus on making money, right? And they can focus on planning for how's my business going to be successful over the next few years, because I know how much I'm up for in terms of my cost of finance for assets or whatever it might be. So how can I focus on the fun part, which is actually building your business and coming up with a plan for success? And that's the stuff that as a business owner we enjoy, right? And invigorates us and keeps us moving and motivated. Actually planning for new success and bringing new business in.
Absolutely.
And making a bit of ton.
Awesome. All right. And then lastly, what should people be doing? You know, from your perspective, you're looking at where you're lending money. You know, your own opinion. What do you think people should be looking at doing now for the next couple of years in their business around this kind of piece?
Looking for opportunities in the market that you're in. You know, COVID's impacted us in so many different ways. But there's always new opportunities within businesses, within markets. For example, you look at the likes of Zoom.
Yeah.
Who were they before COVID?
Yeah.
Oh, are we?
Yeah.
Oh,
yeah.
Hi, Zoom. No, but you look at that before COVID, right? And I don't know, and following that, it's like, wow, massive opportunity for them, and their shareholders be pretty happy, I'd suggest. With how things are going at the moment. So there's always opportunity. Every crowd has a silver lining, so to speak. So it's a matter of knowing your market, knowing where you can be different. So what's your point of difference to your competition? Make a plan for that to capitalize on it. Get great advice from Rick and Mordecai and the team at Sidekick, and get stuff going.
Perfect.
But absolutely, one of the things in there is, what are my fixed costs? Especially, what is my cost of finance at the moment? And if there's anything that I can shift within that, what's it going to cost me? Or how are we going to benefit as a business financially and from a productivity perspective as well? By either looking at what our current arrangements are, and what are our options for that? Could we go and lease something new, or could we look at a different financier that's going to not only give us a better rate, because we're so focused on rates here in New Zealand, but what about a better experience as well? And someone who's going to understand where we're coming from and understand what our plan is for the business, and be able to help instead of like a faceless finance.
And better products, isn't it? You know, one piece of advice I was given going into this was think a lot less about your equity. You know, if we are about to go into a tough recession, if you've got equity there, it's your friend, but like, you might need to sacrifice it a little to get through. So it might be a case that you're dealing with good financiers there, because you're going, like, the value of my assets might come down, the interest I'm going to pay might go up, but what I want to do is survive. So, you know, kind of what levers can you pull to say, well, okay, so I'm going to keep this vehicle a bit longer, and I'm probably actually going to pay it over a bit longer as well. And I know at the end of that, like we were talking about earlier, that solvency versus cash flow. Cash flow is good, solvency isn't, but we have a horizon where that comes right. So, and again, it comes down to plan, doesn't it?
Yeah, absolutely.
You can't really do that well when your head's in the sand.
No, exactly. And you know, low equity is one thing, but no equity is a different thing. So I would absolutely agree with you, Rick, and I just caution there as well to make sure that, you know, there is equity in the business. With an upside down balance sheet, no matter how good your story is, it's going to be pretty difficult to get anything across the line with any lender. And on that, especially your shareholders' current account, like, it's not something that sort of people tend to,
well, they don't know about it,
understand well. And I would encourage you that if you don't understand your shareholders' current account, what does it mean? How does it impact my balance sheet or my business ultimately? If you don't understand those three things, then please be talking to the guys here.
You've got to find out.
You know what it means, and you know how it's going to impact you, because it is super important.
That's the one that basically, just so people do know, if you've got that out of kilter, the way it shouldn't be in your business, and you want to close your business, that number is how much you're going to pay first, and it couldn't even get quite a bit worse than that. So
that's not including the interest that you have to pay.
That's right.
So actually, that's a really key thing, isn't it? Because if you are in that position, no equity, low equity, whatever it is, actually find out these numbers in your business now, because actually make decisions on that now. Don't throw good money after bad, especially not other people's money after your bad money. That would be a really key thing. Hey, look, we'll wrap up here. Mordecai, you're here for that.
Oh, yes, of course. I had to make it for that. Thanks for joining us, Sam. I'm sorry I was a little bit late. I promised to be on time next time. But I hope everyone was picking up what you guys were putting down. And we are back from the school holidays. So we're going to have a few more episodes coming up in the pipeline. We've already got a few people booked in for the next couple of weeks. So stay tuned.
Thanks.
Thank you.